All right, we've got your Edmonton housing market update for May 2025. In this, we'll be talking about everything from pricing to market dynamics. We're seeing single family home prices up, townhouse prices up, even apartment prices up. We're gonna get into all of that here in the video, so let's jump right in. All right, let's look at the market as a whole. So the market as a whole, this is basically lumping everything together. So it's not gonna be quite as useful for guiding you on specific decisions you might wanna make with buying and selling, but it's still helpful just to see the overall health of the market. So the market as a whole is sitting as a balanced market at 45.71% absorption rate. So it is leaning more towards a seller's market, but still technically balanced. The average price across Edmonton was sitting at $444,725. And you can see here that at the end of April, there was 4,036 active listings and there was 1,845 sales. So the number of listings have picked up, which makes sense going into April and getting into that spring market. Listings were up 13.79% from March and up 7.63% from April last year. So we had more new listings or active listings than we did at the same time last year. And the sales were up 5.19% from March and down 13.95% from April of last year. So in total, there's less sales happening this year than there were last year, but there's still a moderate uptick in sales volume from March, which is again, not unusual because it's going more into the spring market. So you expect to see more sales happening. Now, if you look over the last year, you can see that that balance has remained relatively stable. We're not seeing any huge swings, but it's not quite as much in the seller's favor as it was last year. Now, the average days on market was sitting at 30 days, which is down slightly from March when it was at 31 days. If you look at the same time last year, it was actually 34. So the stuff that does sell is on average selling slightly faster than it did this time last year. Now, looking at market distribution, this is basically just what price range properties are selling in. You can see 13.86% of the market was under 200K, 15.24% between 2 and 300K, 16.89% between 3 and 400K, and the largest segment between 4 and 500K with 22.62% of the market. Then it drops quite a bit down to 15.57% between 5 and 600K, and then drops a lot to 7.6% of the market between 6 and 700K. From there on out, it keeps dropping further, 3.46% between 7 and 800K, and 1.77% between 8 and 900K. After that, you got less than 1% in each 100K bracket, unless you count 1 million to 1.5 million, where you got 1.49% of the market. Now, for the total market, I do like to look at the composite benchmark price as a comparison. Benchmark pricing I find more useful than average pricing. I just kind of quickly went through that on my other infographic here. But the benchmark price more accurately tracks the actual changes you're seeing in prices, whereas average prices can be influenced by higher percentage of higher priced properties selling or a higher percentage of lower priced properties selling. That'll move the average on you, whereas benchmark is tracking a specific property type, size, number of bedrooms and bathrooms, and how that kind of performs over time. Now, the benchmark price for the market as a whole was sitting at $427,100 in April 2025. And the other thing I plotted on the graph here was April 2024 when it was sitting at $388,000. It's up quite a bit from the same time last year. You can see that we did go down a little bit in the fall, but have been going up pretty steeply since then. Not much of a change from the March benchmark price. I think technically it's down just a smidgen, but you can see that it's basically remained at that same kind of point since last month. The other thing I'll point out is we are quite a bit well past the peaks that we saw in 2022 for the market as a whole. Some of the other graphs, this will be even more apparent, but it did take us a while to recover from those peaks in 2022. When we got into 2023, we didn't really see much growth, but we saw a lot more growth in 2024 and so far in 2025. All right, so I'm just about to get into the detached market, but before we dive into those stats, I wanted to give you guys an opportunity to book a free real estate strategy call with me. So if you're thinking about buying or selling in the Edmonton market, whether you're a homeowner, a first-time home buyer, or an investor from out of province, I'd love to help guide you on your journey of buying or selling in the Edmonton real estate market. And you can book a free strategy call with me at booktrevornow.com. If you just go to booktrevornow.com, you can select a time on my calendar essentially and schedule a 30-minute call with me. I'll do everything I can to help you and simplify the process, answer any questions that you might have. If you end up becoming a client down the road, that's great. If not, not a big deal. You can also give me a shout if you prefer to just text me. You can text me at 780-819-5508. That's 780-819-5508. All right, so let's look at the detached market. So it was sitting at an absorption rate of 46.78%. So we're getting pretty dang close to getting pushed into a weak seller's market with detached homes. That is down slightly from last month when it was at 49%. So, you know, we've come from the edge a little bit, the edge of the seller's market. We're a bit further away. Like, we've been in a balanced market for most of the last year for detached homes, but it's always been closer to that seller's side. April last year, it actually was technically a weaker seller's market. So it's not quite as intense as it was that time last year, probably based on inventory and sales levels, which we'll get into in a bit here. So average price was sitting at $579,653. That's up just over 1% from last month and up 9.99% from April of last year. So basically a 10% increase in average prices for detached homes in the last year. We'll look at the benchmark as a comparison later. If you just look at last year, the average price was sitting at $527,000 and now it's at $579,000. So that's kind of the gap that we saw in average price increase. Now, looking at actives, at the end of the month, there was 2,050 active detached homes on the market. So those are still homes that are actively on the market. They haven't sold yet. They're waiting for the perfect buyer to come along. There was 959 solds in April. So the active listings were up 10.27% from March. So we saw a decent uptick in inventory from March and up 3.85% from April of last year. So just a slight uptick in total active inventory from last year, whereas sales are up 5.15% from March, but down 17.26% from April. So that pretty much explains the difference in it being more of a seller's market last April compared to now. It's still a strong market, but just not quite as intense. You know, we have a little bit more inventory and a little bit less sales. Like 17% less sales is significant. So those two things kind of combined make it so it's a bit more balanced than it was last year, but still we've seen price pressure. Average days on market was sitting at 30 days, just like the market as a whole. That was consistent from last month in March and down slightly from last year when it was at 34. Now, the market distribution, under 200,000, you got just over 1%. Not a whole lot of detached homes under 200,000. And if they are, they're gonna be a doozy. Between 200,000 and 300,000, you've got 2.79% of the market. And between 300,000 and 400,000, you got 11.42% of the market. Biggest segment was between 400,000 and 500,000 with 28.68% of the market. And the second largest segment was between 500,000 and 600K with 26.74% of the market. Then it drops quite a bit. Between 600,000 and 700K, you got 13.95% of the market and 6.26% between 700,000 and 800K, 3.41% between 800,000 and 900K, and 1.65% between 900K and $1 million. There's a little bit between 1 million and 1.5 with 2.86% of the market, and then quite minimal after that. Now, for detached homes, we can actually take a look at two different benchmark prices. We've got 1-story single family and 2-story single family. So 1-story would be bungalows, bi-levels, raised bungalows, that kind of thing. We can see that the April 2025 benchmark price for 1-story was sitting at $465,500, whereas in April 2024, it was $404,800. So that's about a $60,000 increase just over the last year for the benchmark pricing. I think we're actually seeing a bigger nominal increase with the benchmark price compared to the average price. That's what it looked like at first glance. You can see for these 1-story single family homes, we're not even close to 2022 pricing. Like 2022 pricing, it looked like the peak was around 410,000, maybe slightly less than that. And now we're at 465. We were pretty much almost there April last year and have continued to go up from there for the 1-story single family homes. So a lot of the price increases have happened with detached homes compared to the market as a whole. Now, looking over at the 2-story, it's a little bit different here. You can see that it's a higher price point. The benchmark price in April was $561,100, still up significantly from April 2024 when it was at $508,200. So about 53,000 higher than it was this time last year. Still quite a bit higher than where the peak was in 2022 when it was probably more like $530, but we're only like $31,000, $32,000 higher than that right now. What would explain that? I think the main thing that would explain the single family 1-story homes running away from the peak pricing a little bit further than the 2-story homes. The best explanation I have is that it's because of the actual price itself. Eventually, there's a breaking point where people can't afford something anymore, and that's going to be different for each person depending on their income and financial situation. I would say a lot of people would prefer a 2-story home. It's still one of the most popular types of homes, but on average, they're gonna be more expensive unless you go with something older. And eventually, if people can't afford that anymore, they'll go for something that's a little bit cheaper. Even though they've still gone up, these two-story homes, I don't think they have quite as much upward price pressure as the cheaper properties, like some of the one-story homes or older single-family homes. But you can still see that it's still seeing quite a bit of upward pressure since the beginning of the year. We're still on an upward trajectory at this point. All right, so semi-detached homes. So this is basically half duplex properties. You're connected to one of your neighbors, but it's still a single-family titled property, so there's no condo fees. These are sitting in a pretty strong seller's market with an absorption rate of 64.6%. That's up a little bit from last month when it was at 59%, but you can see we've been in this territory. We were in this territory in February. It was a little bit higher even in January. Going back to last year, it got super tight in August, and April and May, it was in the 70s. So it's been a seller's market for quite a while for half duplexes. It's a pretty small market. We'll get into that in a moment, but you can see that the average price was sitting at $432,519, which is up 1.12% from last month and up 5.41% from April of last year. So kind of interesting that we're not seeing that much of an increase on the average price, but just looking at this graph, I'm not totally trusting the data in there. So we'll unfortunately don't have a benchmark price data. Otherwise, I said we would look at that instead. Again, the average price can get messed up pretty easily if there's a lot of higher priced properties or lower priced ones selling in a given month. What I said earlier is a small market. So there's 339 active listings versus we were looking at, what was it, like 2,000 for detached homes, I think? Yeah, over 2,000 for detached homes. Now we're talking about 339. So it's a much smaller market. So it is going to be more sensitive to changes in supply and demand. So if there's an extra 50 buyers even that month, that's going to really change the way that market feels. So it's not that surprising to see that it's been sitting in a seller's market for quite a while, because unless that we somehow manage to get a whole bunch of other half duplexes that come on the market, it's hard to change that balance. The active listings, it's still up from last month. It's up 8.31% from March. Year to year, it's up 10.42%. So generally still higher inventory levels than last year. Sales were up 17.74% from March and down 2.23% from April of last year. So even though this has been following the same pattern as the other market segments where we're seeing sales being down from the same time last year, what stands out to me here is that the sales are down less. They're only down 2.23%, which is not very much of a change from last year. This market hasn't seen as much of a reduction in demand as the other market segments we've looked at so far. Now, the average days on market was sitting at 26, so that's 4 days shorter than the other markets so far. It was 24 days last month, so even lower. Same time last year was at 30. Now, market distribution, again, you're gonna find almost nothing under 200,000, 7.57% between 2 and 300,000, and 27.86 between 3 and 400,000. Biggest segment, again, is that 4 to 500,000 market with 46% of the market, and then a huge drop off after that with 13.14% between 5 and 600,000. Then we got 600 to 700K with 3.29% of the market and 1.43% between 7 and 800K, and then almost nothing after that. Unfortunately, I do not have benchmark pricing for half duplexes. There's not enough of them for them to have good data on that, unfortunately. So we will go into the next segment looking at townhouses and row houses. All right, so townhouse and row house. Before I get into it, that is my chair squeaking. I'm not letting loose. Anyway, so the townhouse market is sitting again in a seller's market with 59.53% absorption rate. That's a seller's market, and it's, again, just looking at the last 12 to 13 months, it's been consistently a seller's market completely across the board for the last year. So townhouses have been hot. They continue to stay hot, and we're not seeing much of a change. It has dropped slightly for the last few months, so there's more spring inventory, but I wouldn't get your hopes up on this market changing significantly in the near future. Average price was sitting at $304,252. That's down 2.51% from March and up 4.18% from April of last year. Again, that just doesn't seem right. So I have a feeling that the data got a little jumbled in some of these average price. Let's keep going. Well, this one we do have benchmark prices, so we can look at that for a more accurate idea on what's happened with prices. Active listings, there was 514 active listings at the end of the month and 306 sales. So you'll see that this market's still small. It's like quarter of the size in terms of inventory compared to detached homes, but it is bigger than the half duplex market. Inventory is up 20.37% from March. So we're definitely seeing a decent increase in inventory further into the spring months. Inventory is up 38.17% from April last year. So a big difference. Sales were up 3.38% from March and down a little bit. They're down 4.38% from April. So again, they're still down from last year. They're down less than a lot of other markets with the exception of the half duplexes. So it's still a hot market. Average days on market sitting at 25 days. Now that might seem like a decent amount of time, but one thing to remember is that the days on market keeps ticking even after somebody has accepted an offer and they're in their condition period. So even a property that ends up getting listed today and then gets an offer tomorrow and goes under contract, a lot of times it's going to be under contract for like 10 to 14 days. So whenever you see a property that says it's sold in like 10 days or 11 days on market, it basically actually sold instantly. It just was under contract for like 99% of that time. Side note there. Average days on market was 24 in March and it was 31 days the same time last year. So average days on market has been dropping. Market distribution under 200,000. You will find some stuff, but it's definitely not a huge segment anymore for townhouses with 14.29% of the market. Still a decent chunk of stuff between 200,000 and 300,000 with 33.1% of the market. It does tend to be older product in that segment now. And then the biggest segment is now 300,000 to 400,000. So a lot of that stuff, there used to be a bunch of townhouses that were built in like the early 2000s in places like Twilligertown that used to be in the high twos, and they've gotten pushed into that next segment in many cases. So you got 37% of the market between 300,000 and 400,000. Still pretty rare to see stuff over 400,000 for townhouses, but it's pretty close to the same percentages as stuff under 200,000. So take that for what it's worth, with 13.69% between 400,000 and 500,000. Then you got a measly 1.48% between 500,000 and 600,000. Let's take a look at the benchmark pricing here. Townhouses, this shows a much different picture than my wonky average price numbers. So you can see that the benchmark price in April 2025 was sitting at $298,800. So the benchmark price has almost gone over that $300,000 mark. In April 2024, it was sitting at $250,100. So we're basically up 50 grand in the last year for townhouses. And you can see that the peak in 2022 doesn't even really look like much of a peak anymore, given what's happened in the last 2 years. It was around that 250 mark in April 2022. So basically it took us from spring 2022 was a peak, and then April 2024 is when we kind of got back to that peak and continued on from there. And we're now up basically $50,000 since then. So townhouse market's been ripping. A lot of people interested in townhouses. Maybe they got priced out of detached homes, and a townhouse is still something you can get, 3 bedroom, 2.5 bath if it's a newer property. So it's still very appealing for families. Even couples still like townhouses. Investors like townhouses because now you can rent to families that are more likely to stay longer and not turn over quite as quickly as apartment condos. But yeah, we're continuing to see lots of interest in the townhouse market, and I think that'll probably continue going forward unless there's a big shift. All right, last but not least is the apartment condo market. So this one, again, if you've watched my videos for a while, I always basically talk about how it's performing much differently than the rest of the market. It's sitting at a 29.35% absorption rate. So it's right on the cusp between buyer's market and seller's market. Now this is going to vary a lot depending on where you're looking and what type of property you're looking at, even what age of apartment condo you're looking at. I was just looking at downtown condos recently. I had a new listing, so I was doing some market analysis there. And based on just the last 30 days of activity, I was still seeing it being like buyer's market territory for high-rise condos. I could have went even further with that and separated out between stuff built in the last 10 to 20 years versus stuff that was even older, and I'm sure I would have seen some differences there as well. But what I'm showing you right now is just the whole market, right? So if you're actually looking to buy an apartment condo or looking to sell one, you reach out to me, 780-819-5508. I can do an analysis that's more specific to your situation and let you know, okay, yeah, if you're selling an apartment condo in Southwest Edmonton in this area, this is kind of the current market conditions that you're playing with. And that is one of the most important things that'll help you make a good decision on pricing and have good expectations on like, okay, how aggressive should we actually be with like this? Because if you're in a buyer's market situation, you're not really gonna have very good success testing the market at a particularly high price because there's just not enough people coming through. You got to be the low-hanging fruit. Maybe that's not quite the best way to do it. You got to be an attractive price in a buyer's market. You got to be the best price property compared to the comparables because a lot of them just aren't going to sell. Anyway, so market as a whole, right on the cusp between balanced and buyers, but it will vary depending on your market. You can see that's been relatively consistent over the last year. It's bounced up a couple times into technically balanced market territory, but not shooting away on us. Average price for apartment condo is sitting at $212,767. It says it's down 1.06% from last month and up 6.57% from April last year. I will show you in the benchmark pricing afterwards, but I have been surprised by what I'm seeing in the apartment market. And I've probably said this before, I do think it should get analyzed a little bit closer because there's something going on there that's not showing up fully in the market as a whole. Because when we look at this and it's like, oh, okay, it's mostly a buyer's market, somewhat balanced, and then you'll see the price gains that we've seen for the benchmark price and it just doesn't quite add up. I think there's certain segments that are doing better in the apartment market. My guess would be that there's now more people willing to buy some of those higher priced apartments that they just weren't selling before, and that's bumped up the benchmark pricing significantly, even though we're still in more of a buyer's market territory. So looking at the actives and solds, there was 1,230 active listings at the end of the month and 361 sales. So what should stand out to you here is it's not as big as the detached home market that had just over 2,000 active listings, but it's still significantly larger than the half duplex market or the townhouse market, even bigger than those two combined. And the sales are not super high considering how many active listings there are. So the actives were up 12.12% from March, so seeing a significant increase for the spring market, but down slightly from last year, down 2.07% from last year. And the sales up, like barely went up. They went 0.28% increase from March, but they're down almost 20% from last year, down 19.6% from last year. Average days on market was sitting at 38. It was 43 days last month and it was 42 days the year before. So should stand out that it takes longer to sell an apartment on average. But one thing I will point out is like 38 days might not sound that bad, but that is only taking into account the ones that actually sell. I haven't looked this up, but for every apartment that sells, there's a whole bunch of other ones that don't, and they don't even get included in that stat. And maybe they've been on the market for 6 months, right? So there's a difference between the ones that sell and the ones that don't sell. The ones that sell, they did something right. The ones that didn't sell, they did something wrong. Usually it's price. There's still a lot of people that are pricing their apartments too high, and then they just sit for months and months and months. So don't be fooled by this number and be like, oh yeah, I could just throw my apartment up on the market and it'll sell in 30 to 40 days. That's if you priced it right. If you didn't, you'll be sitting a long time and nothing will happen. That's my 2 cents on that. Take it for what it's worth. Now, the market distribution for apartments under 200,000 was sitting at 52.86% of the market. So still most of the market under 200,000. Between 2 and 300,000, you got 35.86% of the market. And then between 3 and 400,000 is 7.82% of the market. And then almost nothing between 4 and 500,000, but we got 1.69% and then very low after that. Now let's take a look at the benchmark pricing for apartments. So this is what's really interesting. In April, the benchmark pricing was sitting at $214,200, which is up still significantly from April 2024 when it was $185,800. That's almost a $30,000 increase in the last year. Like I said earlier, warrants a little bit more deeper research because this part doesn't totally add up with what I was talking to you about balance in the market. The other thing I put on here was April 2015 pricing. Very interesting to see that April 2015, our pricing for benchmark was $214,900. So it's taken basically from April 2015 to April 2025, 10 years for the market to go full circle. So from 2015 to January 2023, we were basically on a slump, but we have been seeing some pretty significant price increases since then, at least for some segment of the market, probably whatever they're tracking on this. So I'm going to dig into that and maybe I'll do another video for that eventually. But yeah, this market, the prices have been going up, at least for benchmark prices. I'm usually not seeing huge increases when I do an analysis on a property versus where it was at a year ago. It's still a bit of a mystery to me, but once I figure it out, I'll share my insights. But yeah, that's pretty much it for the market report. If you got value out of it, make sure to like and subscribe or book a call with me at booktrevornow.com. I will see you on the next video.